Hello traders and investors, welcome back to the Trend Trader channel. In this week episode, we're also going to be looking at what happened in the JSE last week. We're going to be looking at different companies that can give us a potential trade or investing opportunities. Remember, it is still your responsibility to ensure that you do your own due diligence so that you can find just enough information to make an informed decision. Whatever we share on our YouTube channel should not be interpreted as a financial advice. Before we start, I would like to ask those who haven't subscribed to please consider subscribing. And if you find value in this video, please make sure that you smash the like button. It was a long week. Well, it was a normal 5 days week, but a lot of things happened in the market. The first thing that we were interested in or that caught our attention was the Woolworths shopping update for the 26 weeks, previous 26 weeks that ended on the 25th of December 2022. As we saw here, we can see that Woolworths was able to grow its sales by at least 18.5%. So that is a positive news to investors because the sales translate to revenue depending on the expenses of the company. That revenue can translate into profit, which then trickle down to dividends to shareholders. So when that happened, the share price of Woolworths Holdings, it jumped up, but we'll look at the chart at the moment. So starting with the JSE Top40, we mentioned previously that the JSE Top40 is now trading above this just 68,000 points level here for the beginning of 2023. We saw that the market opened with a decent amount of strength there. We have a video where we're showing people how to trade a breakout and retest. So the JSE Top40, it did just that. There was a breakout and a retest, and then the share price, the price of the all share index or the JSE Top40, not the all share index, it came back to retake this previous resistance level there. So when that breakout happened, that was a decent place to take a long position if you are trading the top 40 index, or it was a decent place then to start looking for more buy opportunities in the market. As things stand, the JSE Top40 is still showing strength, even though there was that indecisiveness in that candle in there. So for people that are not familiar with candlestick pattern, we will leave a link to a video where we're showing you how to use candlesticks, especially if you are using a trading view, but the information is applicable to any charting software that you can use. So when we say there's an indecisiveness in the market, remember that the body of the candle represent the opening or the closing price depending on the direction. So in this case, we have a red candle. So this tells us that the sellers were trying to push the price down, but there was indecisiveness between the buyers and sellers as the price closed in the middle of the week. So in this case, because it's a red candle, that was the opening price. So the market opened weaker. I mean, it opened stronger last week. Supposedly, it closed weaker. It opened strong at the beginning of the week, and then it closed weaker. But then again, remember that this candle is just a dash there. There is no body. So this tells us that there is indecisiveness. So this coming week, what we want to see is a decision either coming from the bulls or the bears, if the bulls are going to push the share price up, or if the bears are going to push the price of the top 40 index down. But remember, this is an index of the top 40 largest companies in the JSE. So depending on how the individual companies within the top 40 are performing, then we can see this move go in either direction. So at this moment, we remain bullish on the JSE Top40 based on this chart. So now let's look at some trading opportunities. Some of these companies we already have them in our portfolio, but some of these companies we don't have them in our portfolio. So, well, it's not easy to have all the companies that are doing well at any particular moment in the market, because remember, your portfolio is just 100% of your capital. Once you are invested in other companies, then you might not have enough cash to take a new position. Sometimes there's no need to sell a good performing company just because you want to take a position elsewhere. So one of the first companies that I want us to look at, it's BHP Billiton. So we posted this for the people that sometimes, or the people that follow us on Twitter, you will see that we have shared the chart. We were looking at this top level here, somewhere around 580, and we had the buy stop order here around 584 per share, as we're expecting that breakout to happen. So if you look at this candle there, even though the volume is low, but it is above that blue line, which tracks the moving average, or which tracks the average volume of this particular company. In this case, what we see this nice breakout. We believe that whenever there's a breakout, it can be sustained. It does not always happen. Trading is a probability game. Something can happen, some things cannot happen. So that is why it is important that at all times you always have a stop loss. So if you look at this previous price action, you saw that there was this breakout, and then there was that breakout level retest, and then the share price came back to take this high level in there. So same thing that we see here, we see this breakout. We don't know when, if this is going to be a retest, or if the price of BHP Billiton is just gonna go trade up, maybe come back and retest this 580 level before it comes before it moves up there. Then wherever it forms that resistance level in there, we can also look to take another buying opportunity in the market. But in summary, we are bullish on BHP Billiton based on price action. There could be other factors. You can look at the company financials or the fundamental aspect of the business. But based on price action, we are bullish on BHP Billiton. Well, now it's called BHP Group, but well, it is what it is. So the other company that also came with a positive trading statement, it was a CFR Richemont. This company, it is a luxury good company. They sell different things, all the expensive things that you can think of, watches and other jewelry and stuff. So it is a similar chart setup with a BHP Billiton. We're looking at this level in here, which has since been broken. So now again, we are waiting to see if the share price is going to go up there. We have a position in here with a stop just below this resistance level, so that if the share price pull back, at least we don't lose a lot of money. It is a position that we are going to hold. Again, you can see the volume or last week volume, when after the company reported those positive numbers, then the buyers, they started to step in up there. If you look at the difference between the opening price and the closing price, it is also small, just similar to what we saw with the JSE Top 40. But in this case, this candle, it closed above this area of value of this resistance level here. Remember, resistance or support is not just a piece of line. It can be anywhere around that previous zone, whether it's a support area or it's a resistance area. Don't think of it as just a single line. The price can do whatever around that area. So yeah, the point is we are bullish on CFR Richemont as well. It is a company that reported a nice sales. Remember, sales means revenue. Revenue means a potential profit depending on the expenses. If there is a profit after tax profit, then we can expect the board to declare dividend, and that it ends up in our pocket as shareholders in a form of dividend. So we really like profitable companies. We don't want to buy a company that is not profitable. Sometimes we do buy companies that are not profitable if the price action looks good, but we are mostly interested in companies that are profitable and have good price action. Okay, so we've mentioned BHP Billiton, and then we mentioned CFR. Then now let us look at the chart of Woolworths Group. Woolworths Holding. I mentioned that they came with a report for the past 26 weeks, which ended on the 25th of December 2022. So they don't have the numbers from after Christmas coming year to date. So it is one of the charts that we shared previously. We noted this price here. Then we first took our trade here when it just broke above this level, but as you can see, the share price started to pull back to come at this level. I'm not sure if this triggered our stop loss at that time, but when it came back around 64, then we took another position in there. As the share price started to move sideways here from November going to December, again we noted this level here, just I think it was around 68 or 69. We noted this level. Again, we had a buy stop order just before the news came. Our order was triggered. As you can see that the share price did attempt to trade above this level. That triggered us into a position in there. So we're in a position with the stop just below that week's candle. And then when the news, when those sales update or trading update it came, the price just shot up to 75%. So the stock, it moved around by 7. So the share price of Woolworths, it moved around by 7% in the last week. So we appreciate that position because we are in there. We bought just at that breakout level, even though we saw that previous week where the position, as soon as we got into the position, the share price it started to pull back. But what we see here, what is nice is that you can see that there is this nice big green candle, which shows that the buyers are really stepping in. So the upward movement, it is supported. You should be worried if you see an upward movement in price, but and then you see like maybe either a small green volume, meaning that there aren't plenty of buyers that are pushing the share price, or if that week you see that there is a slight selling even though the price went up. So you want that momentum to be sustained by buyers because we are looking at a long position. Remember, we're still doing that 10,000 rand stock trading challenge. Some of the positions that we have at this moment, in fact, all the positions that we have here are part of that 10,000 trading stock trading challenge, but we will give an update on that in one of the videos that will come before the end of January, because we want to give you an update of how we have performed in January. So if you're interested in that information, make sure that you subscribe if you haven't subscribed, and make sure that you click that bell notification so that you do not miss any of those updates whenever we come with those videos. Right, so we spoke about the JSE Top40, BHP Billiton, CFR, Richemont, and then we spoke about Woolworths. Another stock that performed a bit erratic, but at this moment it seems to be moving, is Glencore. We also have a position in Glencore. We've been trading Glencore since it started trading above 105 rand per share, somewhere in there. Sometimes I draw these lines nicely, sometimes I just draw them whatever. But we first got our Glencore shares when the share price started to trade above 105 rand or 104 rand at the time. And then we had the stop loss somewhere around, I think the stop loss initially was around 94 rand, and then it shifted to above 95 rand. So since then the share price, it attempted to trade up here, coming all the way to just above 122 before it started to retrace back to that previous resistance level. So now we can see that the share price has started to recover. It has now since came back to that previous level here. As you can already see, we have marked this potential area of value. What you want to see the share price breaking above this level, ideally closing above this level. So in trading, or whenever you are in the market, there's always going to be pros and cons. Things don't just happen, especially they don't just happen in a good manner. So let's say this is your resistance level here. In this case, we're using a weekly chart. We're not using a daily chart. Remember, it's Monday to Friday. The market is open. People are trading and stuff. So maybe let's say on Tuesday or any day, but before the end of Friday, the share price, it crosses above this level, and you have set a buy stop order just above this resistance level. Your order could be triggered. Let's say it's Tuesday, and then the following day or the following days, then the share price, it starts to trade lower. Depending on where you set your stop loss, the share price can just trade below until it triggers your stop loss. So that is one of the things that you have to deal with if you are using technical analysis for investing or for trading. Technical analysis is a tool that can be used in the market. Don't just describe technical analysis as something that is associated with trading. That is incorrect thinking. So it is just one of the many tools that are available to investors and traders alike. So what we're saying here is that if we're using a weekly time frame, if the trade is triggered during the week, there is a chance that we could get into a fake out, but also the other option is that the share price can just simply continue to trade up there. So we'll be happy if the share price continue to trade up there, because whenever we buy something and then the share price go up, if now we're looking at the weekly close, if the weekly close is a big candle, as we saw with Woolworths, and then now we have to enter our position here. This gap here, it now represent risk to us, because remember, the stop loss has to be below the previous resistance level. So now instead of having a small risk amount, we end up having too wide of a risk. So it is something that you really need to think about whenever you're buying shares. This is information that can help you as an investor or as a trader to reduce the amount of risk that you're taking in the market. Remember, you cannot run away from risk. If you don't want risk in the market, then just get out of the market, because every time you open a position, you are taking risk. So you need to ensure that you try by all means to reduce that kind of, or the amount of risk that you're taking in the market. So yeah, that is where we are at with Glencore at this moment. We're waiting to see. We have our buy stop order somewhere around 122 rand per share, with our stop loss just below this level. So we are going to see how this is going to play out in this coming week. We are hoping for the best. Fingers crossed. There are so plenty of many other companies that are performing okay-ish or even performing well. Remember, there are over 300 companies in the JSE alone. We cannot buy all those companies. And if you do buy all the companies that are in the JSE, we are very much going to end up getting the performance of the market. So then there's no point doing that. You can just simply buy the JSE All Share Index, the one that comes from Satrix, I think it's called All Share Capped Index or something like that. But if you want to do stock picking, then sometimes you have to let go of some companies, because once your pockets are full, then your pockets are full. One of the companies that we know for sure at this moment we are going to miss out on is South 32. We already have some companies within the mining sector. So we saw South 32 is starting also to perform in a nice manner. We can see this nice recovery. It formed something that looked like a bullish flag, and then it broke above this level. Also, it came back to break above this resistance level here. So we're still noting that there's that resistance somewhere around 60 rand per share. Maybe the share price is going to come here around 60 rand per share, and then we're going to see what kind of price action that is happening there. So we have a position on Sibanye. Yeah, we do have a position on Sibanye. It's a company that I can think of, and also Glencore that is in the mining sector. So in this case, we don't have a position on South 32. Even though we love the price action, we just don't have enough capital to take a position there. And it is not the only position that we can lose. There are so many positions that we can potentially lose in the market. Last week we mentioned, well, maybe on Twitter, we mentioned that we have a position on Discovery. As you can see, we bought Discovery just when it came, it broke above this level. At this moment, that position is still moving in our favor, but anything is possible. We don't know how fast Discovery can go up, if it does go up. But if Discovery stop going up, then we will have a problem. At this moment, both of our trades are in profit. We first took this position here, which has now moved about plus 1 R. We'll explain the R concept when we give you an update on our 10,000 Rand stock trading challenge. And then we took another position here when the share price was just somewhere around 134 Rand per share, and then we adjusted our stop loss. So the first position now is risk free, because now our new stop loss is somewhere around 128. So we have protected a break even on this position, and now we have only this risk in this position. But in terms of size, now we have doubled the position size without doubling on the amount of risk. So we're waiting to see the outcome on the market. We're noting all these levels where the share price can be stagnant a bit. But whenever you take a position, you don't always aim for a perfect entry. You just take what looks like a decent entry, and then you manage risk from there. Then at the end of the day, it is the stock market that is going to give you feedback on your position. So I think for today, we've already covered enough stocks. You can also add some of the stocks that you will be trading in this coming week. I know some companies will be paying dividends tomorrow, like companies like Tiger Brands. They will be coming with dividends. Satrix ETFs will also be coming with dividends. If you have dividends from Satrix, not I don't think new funds or core-shares will be paying dividends tomorrow, but Satrix, they will be paying those dividends, so, or distributions. So for some of those companies, we do have position. For other things, other ETFs, we don't have position. So we're not expecting to receive some dividends in this coming week. So that's it for today. Once again, if you haven't subscribed, please consider subscribing. And if you find value in our channel, we will appreciate it if you smash that like button in this video. And if you have any comments, suggestions, anything, leave it in the comment section, and feel free to share this video. We will see you in the next video.